Sandip Bhagat from Whittier Trust. Steve Grasso is here from Stuart Frankel and Rick Santelli with us, as always, from the CME Group in Chicago. Steve, with the threat of auto tariffs hanging in the balance, is this going to be a market mover to see what comes out of this meeting between Juncker and Trump?
Yeah, well, I think that's the major market mover today. We saw the market sort of having the same effect it did yesterday, where you saw there was a bid in treasuries, there was a sell pressure in the equity market, and the softer we see Trump on trade, we heard a lot of congressional headlines as well that you might be getting gridlock from the president's own party. The Republicans are running Capitol Hill. They're running the Oval Office. But if Lamar Alexander decides to be a roadblock for the president, that could be a win for the markets. So
you're talking about this proposal of legislation. I'm talking about the proposal of getting in the way of a little bit of tariffs. So the market has been afraid of trade. If that happens, then the market can run a little bit further, maybe a little bit faster, and that's why we saw a couple of key technical levels being taken out today.
Sandip, how optimistic are you about the outlook for the U.S. economy overall? GDP, of course, coming on Friday. Do you think that print is a late cycle print, whatever it comes out at, or are we still got a few years to run?
You know, people fret that this is the end of the economic cycle, that it must die if for no other reason than its sheer chronological age. But we disagree. There are a couple of reasons for that observation. Leading economic indicators are rising. In fact, recessions typically set in 5 years after they make a new all-time high. That high, they got back to pre-crisis levels just about a year and a half ago, suggesting that there is still more room for this economy to grow. Recessions set in 5 years after the Fed begins a tightening cycle. They're only 2 years into that cycle. And here's just one interesting data point on interest rates and Fed and the policy. You know, normally, prior to a recession, the real Fed funds rate, nominal minus inflation, tends to be close to 400 basis points. We know the Fed funds rate right now is about 2%. Inflation is running between 2 and 3%. When you do the arithmetic, the real Fed funds rate is between minus 50 and 100 basis points. So the Fed has not even come close to normalizing monetary policy, let alone overshoot it. That leads us to believe that we have a few more years left in this cycle.
Sort of still in easy mode. Rick Santelli, bond market action today. The 2-year yield reaches another multi-year high while the 10-year yield goes the other way.
Yeah, no, the 10-year yield went the other way a little bit, but really the proactive force to the flattening since that bout of steepening really has been the short end. I think that's the guns hot part of this. And when you contemplate that we're looking at important numbers on Friday with respect to GDP, we have ECB tomorrow with a press conference. The curve could get a little wiggly here, but we did have a very stellar 5-year note auction today, which was a bit surprising to me. Maybe investors think that, you know, this is pretty much the peak. And of course, maybe they're looking at the long end running into some resistance right around the psychological level of 3%. And as for the ECB, I wouldn't look for any major changes, but everybody's getting a bit nervous that whether it's the ECB or the Bank of Japan, you know, they're definitely kind of running behind the schedule. They should be normalizing. They probably are late in that. Even our Fed was late, but they're moving. And then finally, I think everybody, especially after Steve brought up what's going on with regard to Lamar Alexander, the loonie, the Canadian dollar, really having a pretty good session. As a matter of fact, if you look at the dollar versus the loonie, looks like the loonie's going to close at the best level since around the 13th of June. Listen, I can only make one observation. If Congress thinks that they need more input into this, hey, they can do it. You know, it would be strange for McDonald's to say nobody makes a good hamburger anymore. They have the power. They have the Constitution. They can do whatever they want. But I would be very surprised if they get the legislation through before Trump's done with some type of deal.
We'll see what happens, guys. Thank you for weighing in. Sandip Bhagat, Steve Grasso, and our own Rick Santelli.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.